Return on capital employed or return on investment, one of the important ratios for measuring the performance or financial appraisal or analysis of an investment. This is the ratio we're gonna cover with its example and practice question in this video. Be with us till end of the video. This is Milad Akbari from Akbari Education. Welcome to your channel. As said, we're gonna cover the return on capital employed, or other name given as return on investment, in detail in this video. What we're gonna cover: ROCE, which is the abbreviation of that, return on capital employed, definition, what is the usage of this ratio and the formula of that, example and practice question. So let's go ahead. The first one, return on capital employed, or other name given to that is return on investment. It shows how much profit has been made in relation to the amount of resources invested. Suppose I'm the investor, I brought some cash as my own cash into the business and some fund as a liability into the business. This is total $10,000 of capital invested or employed in the business. What will be the return on that? This is called ROCE. What is gonna be used for? We can say, suppose we have a branch, a location, a separate entity there, which there is an individual independent manager for that. How are we gonna measure his performance? He is fully authorized to do his own investment, to gain some revenue and do some expenditure by totally his decision. So how are we gonna measure his performance? We can say this is the target ROCE for the company, this is the cost of capital of the company, and you need to reach and even cross this amount. On such a case, we can measure his performance. Or another aspect, suppose I'm an investor, a company said that we gonna generate return on investment of suppose $10,000, but there is another bank offering me that if you bring the cash there, we're gonna pay you 12% return on the capital you are investing in the or you're putting in saving account or in the account. So in such a case, I need to make decision whether go for such a secure 12% return annually, or should I go for this 10% the company said they're gonna pay me. In such cases, the ROCE is one of the beneficial ratios that support your investment decision. The formula for that is profit divided by capital employed. Profit, mostly the profit before interest and taxes used there, but it can be based on various professional bodies. You can use the net profit, you can use the profit before tax, you can use the profit before interest and tax, and even the gross profit. So whatsoever you can use, divide that by capital employed, and you can compare with cost of capital or with competitive exists in industry. But mostly, as I said, the PBIT or PBT is used very broadly for such calculations. So let's go to other part. What does it mean by capital employed? Capital employed is the amount you have invested in the business, but there is exclusion from that, which we will come on that. So capital employed is the addition of non-current asset, which is the fixed asset. We have another video in our channel for the elements of financial statement with full description on the nature of asset, fixed asset, current asset, and these things. I recommend you go and review that one with its examples and everything. So we're gonna add the non-current asset, which is the fixed asset of the business, plus the net current asset of the business. When these two come together, will give us the capital employed. What is net current asset? When we deduct the current liability of the business from the current asset of the business. Suppose I have a portion of asset which the life is expected to be less than 1 year, and it is easy to change it and make it liquid, to change it in a cash. That's called the current asset. If I deduct the current liability, the short-term liability of the business from this one, the remaining portion, suppose I have $100 cash available and I need to pay my current liability or account payable of $50. The remaining $50 is called net current asset. We will add this to the fixed assets of the business and it will end up to the capital employed of the business. As always, there is an example. Example said two companies are there and they ask for calculation of ROI, or return on investment, and beside that we will compare which company is doing better. They have the profit of 5,000, both the same, sales of 100,000 and capital employed of 25,000 and 50,000. So suppose as a non-professional accountant, when you see they have exactly the same profit, exactly the same sales, so I can say they are the same, no difference. But as a professional accountant, you will compare whether they generate this profit or sales in comparison to the actual amount you have employed or you have locked in the business as an investment or not. For such case, ROCE will be used. For calculation, we can say we have the company A, the company B. The profit was about to be divided by capital employed. The profit here it mentioned is $5,000, but the capital employed in company A was $50,000. But here in company B, the same $5,000 is the profit of the company. What was the capital employed? It was $25,000. We're gonna multiply this by 100% to reach the percentage figure and the result. We're gonna multiply the same by 100% to reach the percentage figure. So let me use the calculator. 5,000 divided by 50,000 is equal to 0.1. 0.1 multiplied by 100% will reach to 10%. So the return on capital employed is about 10%. For this company, 5,000 divided by 25,000, 25,000 is equal to 0.2, which is multiplied by 100%, 20%. So you can see that they have invested some cash of 25,000 and 50,000, and the return on this capital employed was 20% for company B and 10% for company A. As an investor or as a professional accountant, you can say that I gonna invest in company B because of its higher return in comparison to the capital employed. So as a rational, I can say company B did well. Let's go ahead. We have a practice question. The requirement for this practice question is what is the return on investment for the investment center for the year? For this year, what is the ROI? And calculate it to the only one decimal place. One decimal place, of course, if you divide something and it has multiple decimal places, you need to round off it to the one decimal point only. The question said an investment center has non-current assets with a value of $300,000. So the fixed asset of the business is $300,000 and net current asset totaling $40,000 as of 31st December 2013. So there are $40,000 net current asset and $300,000 non-current asset to the business. It made a profit before tax of $40,000 and the tax charge for the year was $10,000. So the PBT, profit before tax, was $40,000 and the tax was $10,000. We can deduct and reach to the net profit of $30,000. But what I said, mostly we're gonna focus on PBT or PBIT to use for this calculation because it will eliminate the effect of tax and interest, which is widely used in different territories. That's why we're gonna use the neutral version of the profit. So pause the video, focus on that, and continue after that. Let me clean the board. To continue to the point, we have the profit of the business, PBT, of $40,000. and dividing this by the capital employed, which was the addition of a non-current asset of $300,000 plus $40,000, both together equal to $340,000. If we divide this together, let me calculate. $40,000 divided by $340,000 equal to 0.1178. We're gonna multiply this by 100%. Remember this point. So we have 0.1176 multiplied by 100%. And to do the round off, we have 11 point. One decimal will reach to here. So 6 is above 5, and we're gonna change this to 8%. This is the rule of math, and you can follow that there. 100% multiplied by this figure will end up to 11.8% to the one decimal point, and option C is the correct one. Okay, this is the practice question. Thank you for being with us. We're gonna continue our weekly videos on normal basis. If you like this video, kindly share it with your friends, let them learn as well. And beside that, don't forget to subscribe to the channel, press the notification button to receive the notification for our weekly videos. Thank you so much.